Good morning, guys. How are we all doing? Happy Friday, everybody. Welcome to this channel, Trading with Dan. Hi, I'm Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, what we are seeing is basically just drifting in price action. You can see volatility is coming down. There is less, obviously, a price range movement here. We are awaiting a break basically below this level, so below 35,000 or above, pretty much call it 39,000, for either an acceleration to the downside or an acceleration to the upside into this level of support and test it again, or into this 42,000 level of resistance. We do have some crypto specific executive order apparently coming out today. Maybe good, maybe bad. The initial reaction may be bad, and then obviously if it's about regulation, maybe the market will realize that regulation will be good for crypto. And also, if they are looking to regulate, it means they're not looking to ban. I mean, you don't really want to regulate something if you think it's something that you're going to have going forward. Don't forget, crypto has a lot of political, has a lot more political support than it has previously, just due to the amount of money, the amount of lobbying efforts in there. Also, the amount of younger people that are involved in crypto as well. You don't probably want to try and alienate all of them. So yeah, it could be good news. It could be good news. Let's see. You will probably notice, if we quickly whiz over to Ethereum Satoshi pairing or Bitcoin dominance, that it is very much struggling at the moment. Bitcoin dominance going up. That could be an indication that obviously any sort of crypto regulation is going to hit altcoins more harder than it's going to hit Bitcoin, and maybe that is getting front ran by Ethereum and by the Bitcoin dominance as a whole. Not the flip side, but also a factor is just general risk and fear in the market. Means there's just de-risking, so altcoins are not performing as well compared to Bitcoin. But yeah, we can see Ethereum Satoshi pairing struggling here. USD pairing just basically stuck in this range here. Pretty important level. Does kind of need to hold this area. Does need to move back up. But yeah, we are getting a lot of FUD, a lot of just bad news in the market. Stock markets, though, this is basically what I think we are waiting on. We're waiting on for this break in the S&P, either a move above and hold above 44, then continuing up towards 4,500. Get above and close above 4,500. I think then we will start to recover quite nicely. The confidence will come back in, and this will look like a nice low. Obviously, the downside is not too far away. Just this horizontal support here, in which case we're looking for 4 moves lower. Plenty of market participants are calling moves lower. So yeah, read into that what you will. There is evidence out there, as there always has been, and as always we know that there is that the PPT, the plunge protection team, that props up the market basically usually by buying e-mini futures in the light trading hours overnight. Because obviously futures are open when cash markets are closed. To try and pump and hold up the markets that way. The most clearest evidence that I've seen of this is that if you actually look at stock market returns during actual trading hours, and then stock market returns overall during trading hours, the market gets sold by obviously real participants selling, and then it's like overnight where a lot of gains and recoveries happen, where it's fake PPT money buying up futures. So yeah, it is a weird dynamic, because those futures obviously do represent the market. I mean, it's almost like stock markets have been taken private by this futures money overnight, and then obviously the real people owning the real shares are selling into that during the day. So ultimately, who is basically owning the stock market? But anyway, that's a bit deep. We won't go into that. We have pressure from the DXY. We looked at this yesterday. I mean, You get V-shaped turnarounds, but like this is a very aggressive move up, and was only going to look like to continue upside if it's gonna top out. Yeah, maybe here, maybe this is a swing failure above this resistance, and it can get whacked back down. But if we fall back check and paycheck, just more pain, more dollar pain trade. And yeah, that will have impact on risk assets, but obviously not really impacting commodities like you would expect. But what it is impacting is gold, and as you can see, gold getting slammed down from its latest iteration of price action above obviously both 1840 it managed this time, and also 1800. Just there you go. We spoke about this as well. The gold gremlins, the gold selling gremlins, are going to come and smash this down as they always do. And there you have it. But also, gold is an inflation hedge, and I've also spoke about how I think we've pretty much reached peak inflation reads. Base effects will start to bring that read down, and also yeah, supply chains thawing out. And then the other thing was obviously people coming back to the workplace, which will then potentially curb the wage price inflation, which is the worst one for Finance 1.0 Ponzi elitist scammers. That is the one that they don't want. They don't care about your house prices, stock market prices, whatever, used car prices going up, commodity prices. They don't really care about that because they own them, they make money, whatever. But when normal people's wages go up, no, that cannot happen. That cannot happen. So yeah, so that is one that the Fed is particularly concerned about, because yeah, that's just one that doesn't just benefit them, does it? So yes, oil, as we did mention, oil up there. I mean, if we do see a de-escalation in what is going on in the Ukraine, then maybe this eases off a little bit, but structurally we know this is bullish. And then also, I don't really see any real reason why Russia will take its foot off the gas in relation to what is going on there. He's in a powerful position. The West is in a weak position just generally. So why not obviously put your foot down? I mean, at the end of the day, I don't want to go in this too much. NATO expansion is the aggressor. Ukraine is practically the last stand between obviously Russia and NATO. So you can see why they're gonna put their foot down here, even if the US was in a more powerful position. And it would still probably defend that buffer zone. But yeah, gone into that too much. 10-year also. Well, it's up there. It is up there. It is threatening to make a move higher. Like I said, I think this 10-year hitting headline numbers over 2% is going to cause serious damage. So I think this will potentially be a top here. But we shall have to see. A number of smart market participants that I am aware of are shorting this, as in shorting the yield, as in buying bonds. Yeah, but like I said, we could see a spike to that 2% before things start to get a bit wild, and then we do come down. A spike of 2%. I mean, there is so much struggling things. There's so many things affecting this market at the moment. Just so much stuff. We've got inflation, we've got the 10-year, we've got the dollar strengthening up, we've got oil prices strengthening up. Honestly, it's like, it is a perfect storm. When you get a perfect storm of things that negatively impact the market, that usually is the extreme of the move based off that thingy. So that's kind of why I'm thinking things will ease off, and then we will continue. Those various things will ease off in obviously in sequence, and then stock market bottoms out and continues and upward. That's what I'm basing that view on, that I've mentioned a few times, that I think we are about a peak FUD for crypto as well. Potentially this executive order may be the peak FUD for crypto, but obviously ultimately that is getting driven by markets as well, driven by these markets too. So if these do recover, we'd expect that to drag crypto up with it. So yeah, interesting times. We are seeing the great rotation out of obviously tech stocks into growth stocks, value stocks. So we're seeing basically the rotation out of growth into value. and that will, like I've said as well, that ultimately rocks the ship, gives us a bit of a turbulent time, and then eventually it all kind of stabilizes, and then we just push on gradually upwards again. So I think we could be at that. If not, if we do see a leg down, we will see a leg down. The PPT will do their best. The Fed is probably about at the extreme of where it will remain pretending to be hawkish, before it then will reverse. Any realistically, any much lower in here, any higher in the 10-year, and much higher in the dollar, much higher in oil. All these things that they're gonna cause a recession for sure. The yield curve will continue to flatten and invert, which is the surest signal of a recession. And then the Fed will quickly actually have to start to reverse some of its rhetoric. So yeah, it is the weekend though. It's not the weekend. It's Friday, so it's the weekend soon. Last trading day, and obviously near the end of the month. Not quite the end of the month. We're near the end of the month now as well. So maybe we see a bit of positioning into that. Maybe we see a bit potentially drifting upwards over the weekend when these traditional markets that are not doing too well for us maybe aren't open. I say maybe have a decent close today and then aren't open. Obviously they won't be open. There's no maybe about them not being open, but realistically we just need a half decent close for the S&P. I would take literally, this is the wrong chart, but anywhere near 4,400 would be a decent close. Above 4,400 would be good. People will look at over the weekend and be relatively bullish, which means people will be looking at crypto and potentially thinking, yeah, maybe I start to eat into this dip. Stochastics, finally, we are waiting for that 5-day and weekly. That is what I've been saying for a long time now, as we've watched it come all the way down. Is what I think will be a big signal for the market. 4-hour down there or thereabouts. 10-hour turning down again from here, so we'll get downward pressure from the 10-hour, but the 12-hour, not much difference. Has a long way to run here. Daily has a long way to run here. 2-day looking to turn back up, 3-day down there low, 5 days the one obviously we're looking at, and weekly still coming down, but a bit of a kink down there at this low level. So yeah, maybe we see into next week a bit more sideways volatility into next week before potentially making a move. Let's have a look, see if we've got any interesting TD sequentials coming in here. Because yeah, the 9 there didn't really do anything, rejected into the 9. Bi-weekly, nothing interesting. Interesting 9 there on the bi-weekly at the top though. Monthly, nah, nothing we can read out of that. 3-day, not bad here. This is a nice reversal here, so yeah. Could indicate a move easily back up to this 41, 42, and then if we break above there, then we could be all systems go. 5 days going to take a couple more candles to get to that 9. By daily, not much. Daily, not too much there. Yeah, not much else to read on these. We want to look at this on the stock market as well. Monthly first, even though it won't really show us anything. Monthly not showing us anything. Bi-weekly, not really anything there. Weekly, not much either. 5-day, nope. 3-day, nope. 2-day is on a 9 though. 2-day is on a 9 at this support level. Probably about the best time frame we could potentially hope for, given the obviously how long this has taken to come down, i.e. not very long. So we're not exactly going to get like higher time frame TD sequentials having run through 9 candles, but yeah, 2-day is looking like it could be a buy. So only realistically helping us with a close, definitely above 4,400. So yeah, it needs to close above there, but that's looking bad. This is a decent time frame to help us out here. I suspect one of these is a 9. Yeah, 9 here as well. So the daily 9 as well. Get us above this resistance. Yeah, we could be looking good. 12-hour, yeah, 12-hour, not really doing a lot there. Yeah, we won't really look any other time frame TD sequentials, but yeah, maybe this 2-day and this daily are gonna got the potential to turn stock markets around. If it doesn't, then yeah, just another leg down. Probably will reach 4,000. I guess it will be if we lose this level. this support level around 42. Low end is like about 42.80. Yeah, and then I don't realistically see why we wouldn't come down to fully and formally test $4,000 in the old S&P. So like I said, don't forget PPTs there. We are at what I perceive to be potentially peak FUD. And by FUD I just mean just some of these markets just exerting pain. So yeah, we could see a turnaround. Everything is probabilities and possibilities. We have had a pretty aggressive move down and everything. We are due a decent bounce, even if it is a lower high. We still due a decent bounce nonetheless. So yeah, there you go, guys. Hope you guys all had a great week. Yeah, that is it, guys. Hope you have a great week. I am not a financial advisor. This is clearly not a financial advice. Always do your own research, and I shall speak to you guys soon.